10-year Treasury note futures under pressure early, perhaps carryover from last Friday's decent jobs report, reiterating a hawkish Fed and a shrinking balance sheet. Also overnight, impacting markets a little bit, Chinese trade balance smaller than expected, and foreign reserves were surprisingly higher. Exports higher as expected as well, and imports unchanged. That said, we saw higher yields across most Asia Pacific. And also in the Eurozone, no major economic news, but saw the German Bund at 7.75-year highs and UK gilts at 6.5-year highs. That said, news flow with regards to China and increased COVID lockdowns, and also Russia seems to be holding futures narrative hostage. Get into the main session, very volatile. Futures experienced a fairly good turnaround with yields actually pressing lower after hitting a 3.5-year high. Also saw a 210 spread steepen to a steep we haven't seen since February. U.S. dollar also very strong. Technology stocks weakening, and the S&P 500 about a 13-month low at one point. We did hear dovish talk from Atlanta Fed President Bostic, who said 50 basis point rate hike is aggressive enough, and his vote is to move to neutral and assess and stay with the pace and see how the markets evolve. That said, traders on edge with the markets, also knowing tomorrow we have 6 Fed speakers on tap, plus a 3-year $45 billion auction. Looking at options, I look at CME Group CVOL. June is trading about the 45th percentile on a 1-month basis and 90th percentile on a 3-month basis. At the money, vols are higher. Skew is basically flat. Option volume very strong, seeing volume in the June 119 and 118 calls, and also 118 to 117.20 puts. Lastly, CME Group E-Micro Mini Treasury yield-based futures volume continues to be heavy. Friday the 6th, we saw a volume of 2,343 with an open interest of 5,050.